Hello and welcome back to Chart Pattern Trading Masterclass by Wealth Education. In this video, we're taking a look at the head and shoulders pattern. So the head and shoulders pattern, we talked about this in the inverse head and shoulders video. Head and shoulders pattern is just simply when the market does this. The idea is that you are in an uptrend and you see a move that continues the rising prices. We pull back, we rally again, pull back, and you expect to continue going higher like you do in an uptrend. But this time we fall. There's a shoulder, a head, a shoulder. Remember that there is a neckline that connects the two shoulders. So once you break down below that neckline, everybody in this pattern is losing money. You put your stop loss on the other side of this shoulder on the exit, and you let it rip. The target is the height of the pattern from the neckline to the top of the head, but quite often you get more, but that's your minimum target. Also, by putting your stop loss on the other side of the shoulder, unless the shoulder's way up here, which that's not really a head and shoulders, you automatically lock in a higher reward to risk type of pattern. So here is Polkadot against Tether. You can see that the market had been falling, but look at this. This is the other example that I want you to see. We tried to rally, we rallied a bit, we rallied even more, and we failed. So even though this is in a downtrend, it's a confirmation head and shoulders of the overall market itself. Let's take a look at Forex. And let's do British pound and get rid of some of my previous drawings there. Okay, so here is an example of a head and shoulders pattern that you may not see right away, but once you kind of train your eyes to see it, you'll understand. So we started to rally. We rallied there, ahead, the other shoulder. We break through that neckline, and we're aiming for that same length. We clearly got it and just came undone. So let's see. Let's add an indicator and see if the MACD told us something. Well, the MACD, you'll notice, did tell us something. It had divergence as we were riding to the upside. So this divergence showing weakening momentum, even though the price was rising, that's a pretty bearish signal. This is the daily chart. Notice that the 50-day EMA broke below the 200-day EMA right here as well. That would have been a candle probably later than you would have entered anyways, but it does give you the heads up. Let's take a look at a stock here. Let's do Coinbase, and we'll do it on a shorter time frame. I don't know if I'll have enough. Yeah, there we go. Okay, so we've been drifting lower. Again, this is a recovery. But there's your little head and shoulders. Not a huge one, but we did get our target, which also coincided quite nicely with that previous support level. That's on the 30-minute chart, so it shows you how it can happen. Here's the 1-hour chart. So this is what is known as a complex head and shoulders. So a complex head and shoulders, a normal head and shoulders might look something like this. A complex head and shoulders can have two shoulders on each side. Can have two shoulders on one side. The idea is, and really this is the key to the pattern, that you have a high that is followed by at least one lower high. So don't get too concerned about it, but that's a complex Head and Shoulders. A lot of people don't see them. But the great thing about this is you can make a little trend line. This is the 1 hour chart, but you can make a little trend line over these last couple of days. When that trend line gets broken, if you're paying attention to the trend line, as a different trader, you're a seller, right? If you're following the complex Head and Shoulders, you're a seller. Again, we like the idea of multiple signals, and the reason being not necessarily because we follow them all, just because that gets more people involved. Right here, you had the signal lines, the EMAs, or the moving averages on the MACD cross the 0 line. Relative strength really never got over. Well, I guess it did get overbought there. So just a touch before we took off to the downside. But clearly this is a situation where the market's going to continue to see a lot of volatility, and volatility, when you start making all of these lower highs and stuff, typically leads to lower prices, just because people don't want to own it when it gets that noisy. Now, remember, we had talked about this previously about how Head and Shoulders don't have to be perfectly level, and this one wasn't, but you can see we definitely took off. So question here is, was there anything else to make us think about selling? Well, yeah, I mean, you've got a previous area of interest, and you can see it has affected price multiple times. So right about here, you can see high, low, high, low, high, low, high, low, right here around 116.5. That's where the Head and Shoulders occurred. Definitely got our target. Yeah, we didn't break down and change the trend, but it certainly shows you, at least in the short term, we were ready to give it up. So the next video that we'll talk about is a bump and run reversal top pattern.